Drone Shield has just reported that they've nearly doubled their results as well. So well done to those of you who are backing into Drone Shield. What else is making waves this week? Well, the Federal Reserve, they meet to discuss and decide on interest rates. There's not expected to be a move on interest rates this Wednesday in the US, but there is rising speculation that Trump will probably name a new Fed chair. Will that happen? Who knows? As to what else you need to know, we'll get this. Silver, since we last spoke about it, it's continued to surge on up. It's hit a brand new record historical high. Just in one day alone, overnight, silver jumped 14% to a brand new record all-time high. It hit $117 US at one point. Now, that jump up, that 14% surge, guys and dolls, that's the biggest one-day gain in silver since the GFC. Is that telling us something? I don't know. That is for you to answer. Silver is up 49% this year. Absolutely phenomenal. Gold is continuing to gain as well, no pun intended. Gold rose 2.5% overnight at one point. It cracked $5,111 US an ounce at one point. Gold is now up 16%, just 27 days into the new year. That's also telling us something. Now, the thinking is that both of these precious safe haven metal commodities will probably continue to pierce new blue sky territory over the coming course. This is for several reasons, as we've been saying, or I specifically have been saying. We've got geopolitical risk rising, US debt concerns are rising, trade tensions, they are revving up. Trump just this morning announced that he is putting a new tariff on South Korea. Also, Trump doubled down on reiterating that he is threatening 100% tariff on Canadian imports tied to a potential China deal. But wait, there's more. What else do you need to consider? Today's focus is bracing for wild and wet weather. Here's what investors might want to watch and why you should potentially consider watching what's taking place globally and in Australia as well. First, in case you've been sleeping under a rock, the US is being hit by record cold temps and brutal weather. Australia also about to face extreme weather as well. So markets are already positioning in the energy market, expecting grid stress. So what is going on? Well, in the US, they are being hit by a severe major winter storm. It's expected to sweep across 32 states. About half of the US population are under some type of weather warning. Flights have already been grounded. Power outages, they're spreading. Freezing conditions have already knocked out some power in the US. Natural gas production, some production has already been taken out. Washington is estimating the storm damage could get in excess of 24 billion US dollars. Now, the grid in the US is already under strain, as we're highlighting. Down under, what do we have in Australia? Well, we've got our own extreme weather, and we're expected to see a second heat wave this month. That's across New South Wales, Victoria, and South Australia. Temps are expected in the coming days, expected to get as high as 49 degrees. So that means we're expecting greater electricity demand, obviously, and significant threats of bushfire. Now, this is according to the Bureau of Meteorology. The bomb, as we call them down under here in Australia, they're basically saying this could be Australia's worst heat wave since Black Saturday in 2009. And just in case you don't know what happened in 2009, it was very tragic. Hundreds of people lost their lives. So what does this mean for investors now? So we're just painting a picture of extreme weather events, same outcomes, basically just pointing to greater demand for power. Obviously, down under in Australia, we'll be looking to blast on the AC. In the US, they're looking to slam on the heaters. This basically means we're going to need a lot more resources. There's going to be a rise in resource demand while supply, as we're saying, is being cut off. So the market is already moving to factor this in. The question is, Will this continue for how long? And that could mean more upside for commodity prices, stocks, and ETFs. So here's what you need to consider. US gas prices, they're already are surging because US supply has been shut off, specifically in the southern and central US states. In some regions there, gas prices are already up 76% this year. Gas prices this morning, before we recorded this, hitting $6.50 US, the sharpest moves in some of that 76% gain this year. The sharpest moves have indeed been reflected after the storm hit in the US. Oil prices, moving on from gas, oil prices a little bit steadier, not as wild as gas, but we should be watching oil prices. They could head on up, particularly because US crude output could be impacted. About 1 million barrels a day could be taken out of the market. What about uranium? Why are we talking about uranium? Well, great point. Remember, 30% of the US grid comes from uranium. So do think about uranium stocks here, ladies and gents. So last but not least, power prices, they're obviously expected to move on up. Obviously expecting greater demand and narrowing supply. The bottom line is we've got a potential trading opportunity here. And you need to think about this with seasonality, perhaps every year. It feels like history is repeating itself. It's not really a phenomenon. It's just what happening around this time of year. So let's think about the stocks and ETFs to watch right now. Well, Baker Hughes in the US was the biggest gainer in the S&P 500 energy sector overnight. They rose 4.4%. The market is again telling us you're probably going to see a lot greater activity for Baker Hughes. We're going to need a lot more repairs, restarts, and also a lift in energy infrastructure demand. So do keep an eye on Baker Hughes. Another stock to watch is one that's spoken about not very often, and that's EQT. This is actually one of the largest US natural gas producers. And their share price looks like it's pushing on up. And obviously, higher gas prices put upward price pressure on revenues. High revenues is great for driving share price growth. This could be a trade. I'm not really saying it's an investment. It's something that you should be watching. As for ETFs, well, one comes to mind, the Energy Select Spider ETF, ticker code XLE. That'll give you broad exposure to some US energy producers that are expected to benefit from elevated oil and gas prices being the key here. Down in the uranium space, think about the world's biggest uranium play. That ETF is URA. And speaking about down under, last week on the ASX, Paladin, PDN, was the best gainer last week. It rose 20%. So lots of interest is in uranium right now, not just because the uranium price is moving on up, but there's an expectation that tech earnings this earnings season are going to basically suggest that the US will need, there's going to be greater demand for uranium companies. As for other investments to watch and perhaps add to your watch list, let's think about Woodside. Of course, that's Australia's largest liquefied natural gas exporter, and Woodside is leveraged directly to global gas prices and tighter supply, which is exactly what I'm highlighting here. So Woodside was up 3.2% last week. And if you have a look what the average analyst is saying out there about Woodside, they actually have got the stock as a buy. And this reflects positivity, upside potential in the stock as well, potentially for the next 12 months. And if you do think about price targets, so you can see these on Moomoo's platform, price targets are ranging between $26 and $27.33. Some price targets are as high as $35.18. So do keep an eye on Woodside. Oil and gas price upside could potentially also see earnings upgraded. But once weather does normalize, you might be expecting this stock to be potentially volatile. So bear that in mind. Another stock to watch is Boeing. They'll release quarterly earnings tonight in the US, and momentum has been really strong. We've been talking about the rise of defense stocks for great reason of late. Now, this company's shares are up 14% this year, again, 27 days into the new year. And Boeing is actually up 42% in the past 12 months. So they've seen a huge turnaround. So what we're looking for tonight in their results is a stabilization, talking about recovery, momentum building, production also rising, also looking for delivery rates improving and potential easing of US regulatory pressure. Or all in all, basically, you want to see how all of this is translating to higher cash flow, higher earnings, and greater confidence in Boeing's name. But if you do have a look at Moomoo and you type in Woodside, pardon me, you type in Boeing, got oil on the mind. If you type in Boeing, you'll see that this has got a strong buy rating among average analysts out there. But from tonight, you may potentially see Boeing's huge backlog of orders play out in their outlook and boosting earnings and estimates for the year ahead. And that could potentially drive an upgrade cycle. So keep your eye on Boeing. Last but not least, we've got Fortescue Metals, a stock for you to watch. So Fortescue this morning, investors in Australia, I guess, learning for the first time that Fortescue's takeover of a copper company has been approved. This is a huge wake-up moment for anyone that is not watching copper. So you've got one of the world's biggest diversified mining companies who makes most of their money from iron ore, 90%, they're moving into copper. So this is absolutely huge. It just shows you it's not just BHP, Rio Tinto, but now Fortescue Metals who want in on the action. Hey, they're saying copper is going to be the key metal of the future. It's poised to deliver long-term demand on the back of the electrification, on the back of the energy transition, greater demand than iron ore. So that is what this announcement is telling you. That's something that you should consider. As for FMG's shares themselves, they are higher today, which is good because their shares haven't really done much this year. As you can see, their shares are down 1.5% this year. Obviously, that's reflective of the iron ore price. Speaking about the iron ore price, that's why it's got an underperform rating. But how this takeover of this copper company will play out in its earnings may potentially drive an upgrade cycle, maybe in a few quarters to come, maybe even it could be a year to come. Anyway, there's plenty of stocks to add to your watch list, much to consider. Thanks for your company.